What's up guys, Kevin Cage here with another crypto update. Hope everyone's doing well. I'm recording this video currently on one of my laptops, so hopefully the audio quality is okay. Just had two back-to-back weddings last night and the night before, and I'll be home in a few days getting back to my regular schedule. And we have a bunch of news to dive into today. So first up, we're well aware for the crypto asset class, there are a variety of funds, investment funds, and global custodians interested in getting a spot ETF for Bitcoin. Now, when we consider the value of all of these investment funds that are interested in crypto, and many of them have a crypto trading desk, they're investing in crypto custody, digital asset infrastructure, DeFi lending, etc. Their total amounts in assets under management is measured in the trillions of dollars, from $16 trillion to $17 trillion plus. And recently we had Larry Fink, one of the wealthiest men on the planet. He is head of BlackRock, calling crypto an international asset. And it's funny to see some of the biggest names in finance starting to change their tune to crypto. Of course, 5 years ago when they didn't have infrastructure ready to go, they weren't interested in it. Crypto's a scam. And although we're in an absolutely brutal bear market, we are seeing some of the largest names in the industry, like Citibank, tokenizing their deposits and making their platform crypto-enabled in the future if regulation allows to connect to public protocols which have their benefits, or Goldman Sachs investing $400 million into a crypto trading desk. Bank of New York, State Street, and many others looking at digital asset infrastructure, crypto custody, DeFi, and crypto trading. Now, we saw this morning a screenshot of Cointelegraph putting out this false tweet saying, "Breaking news, the SEC approves iShares Bitcoin spot ETF." We saw the Bitcoin price chart today draw a 10% move and wicked up to 30,000. And for me, a Bitcoin spot ETF is not if or I hope they approve it, they will, the question is when. And as soon as BlackRock or other large organizations have a Bitcoin spot ETF, other firms are going to follow, which will also lead the way for other spot ETFs for other alts, including Ethereum, XRP, and other top assets. Now, Larry Fink of BlackRock recently said he recommends having 90% of your portfolio in equities, so about 10% left for other asset classes. So let's assume in the future when these multi-trillion-dollar funds have a spot ETF for just Bitcoin just to start before other alts, that is still buying actual physical Bitcoin to back that ETF. If these funds decide to do a 1%, a 3%, or even 5% allocation into the crypto market with $16 trillion or $17 trillion plus in AUM on the low end, that is a couple $100 billion in buy pressure for the crypto asset class and plenty of liquidity. And when looking at the crypto asset class today, the markets are dry, there is not a lot of liquidity, the volume is low, and during a bull run the volume is vastly different. For example, just looking at XRP today, its 24-hour trade volume on CoinMarketCap is just about 1 billion. During the bull run, when we had these multi-100% moves and impulses, the volume was up over 20x or 21x times higher. In a few videos ago, we compared a few alts looking at their bull run volume and comparing it today, and the difference is massive. Sometimes the difference is a factor of 5, 10, 50, or 100x. Now we know Swift, even here in 2023, quoting the World Economic Forum, estimating that volumes could reach $24 trillion by 2027. And this volume is referring to the volume of tokenized assets and other markets that will be tokenized. Stocks, bonds, real estate, commodities, precious metals. So they say by 2027, tokenized volumes could be $24 trillion over the next 3 to 4 years. And then when you consider the estimates put out by BCG estimating a $16 trillion market for tokenized assets by 2030, public protocols in the crypto asset class are going to play a crucial role for better security, better liquidity, etc. So I tweeted this the other day, fast forward 5 years, kind of in between the BCG estimate of 2030, but also the Swift volumes estimate of 2027. The crypto asset class is valued at trillions of dollars, again surpassing its previous all-time high. Many of the world's assets are tokenized, with many more on the way, and even new asset classes and new monetization opportunities. Many projects once valued at under a $1 billion market cap have exploded 50 to 100x in value. And only in hindsight do we realize that every bear market or multi-year bear market that we've had and we have endured presented some of the greatest opportunities for generational wealth. So I'm just saying 5 years in between the Swift estimate and the BCG estimate. It could happen sooner, it could happen later, we really don't know, and this is just an example of what could happen in the future. And there will be successful projects that far exceed a 50 to 100x in value. We've already seen several assets do a 300 to 500x over the past few years. And there will likely be other projects that completely fail or get replaced by better tech. So I understand if somebody might be bearish over the coming weeks or coming months, but I truly struggle to be a long-term bear on this asset class knowing everything that's happening. During March 2020, when Bitcoin was at $3,000 or $4,000, there was virtually no hope in the retail market for Bitcoin to just go ahead and create a new all-time high price within a year and a half, but it did. So crazy things can happen. We know Bitcoin's all-time high market cap far exceeded over $1 trillion. A $2 trillion market cap for Bitcoin would take Bitcoin to just over 100,000. And since Bitcoin's all-time high price, it has been over 700 days. There's a lot of fear, there's pessimism, there's frustration, and rightfully so. 2 cycles ago, during the 2015 bear market, it took over 1,000 days to break into a new all-time high price. The last cycle we had also took just over 1,000 days. So while market fear is at a very high level, and now some people are concerned about some of these big funds getting involved with Bitcoin and getting a spot ETF talking about manipulation, we have to face the facts. Markets are already manipulated, there's tons of whales, there are huge entities that already have crypto exposure. I personally welcome spot ETFs, I welcome more bridges and on-ramps to the institutional markets, the biggest markets in the world. I know crypto is volatile. Bitcoin can crash under 10K, but it can also easily surpass 100,000 or at the very least do a strong retracement. We've been playing in this range for over 200 days, unable to break past that 31 or 32K level. And every passing day, we're getting closer to the next Bitcoin halving. The longer Bitcoin is ranging sideways or even sweeps the lows, that is just more time for me to accumulate my projects at a very low price. We have open fair value gaps above at 35K at 60,000 on the weekly time frame. As long as certain alts that I see developing are at lows, I'm going to be accumulating as long as Bitcoin is still down here. When Bitcoin finally starts retracing, closing these above gaps, I'm not going to be buying alts. We've had over 2 years to accumulate assets at lows or all-time low prices. And the crazy thing talking about last cycle when XRP's trading volume was up over 20 or 21x compared to today. Remember that XRP wasn't even trading on a variety of exchanges and it didn't have legal clarity. Now, for the first time, XRP is one of the only digital assets that is not a security. Another thing a bear market does is it affects our psychology but also our beliefs. It just beats us down and I'm right there with you. But we have to look back at history. Remember, XRP's all-time high market cap was over 140 billion. Certain things happen that we once thought were impossible until it happens. So every new bullish cycle typically brings a new possible. Projects like Doge and Solana both surpassed over $70 billion in market cap. Cardano surpassed $99 billion. Other projects in the top 10 and 20 had market caps of 10 to 20 billion. If you believe long-term that Bitcoin creates a new all-time high market cap surpassing 2 trillion, Ethereum surpasses its previous market cap of 570 billion, already halfway to 1 trillion, and reaches a $1 trillion market cap, there's going to be other projects that have multi-billion dollar market caps again, and potentially much higher levels. And for years, we've talked about utility of these networks that get adopted and actually process billions and billions of transactions for real-world applications. The final step to see this true utility at scale and see which protocols are actually most adopted and drive the token value is based on regulation. Regulation is the final hurdle. Once we have regulation for some of these public protocols to be adopted, the true money can flow in. So I think we can all agree, for those of us that believe in Web3, once we have regulation, that is when we could see arguably one of the biggest bull runs in history, a regulatory-based or utility-based bull run. We have shared by Roth Economy, Ripple is hiring a shareholder communication senior manager. He accidentally made a typo saying ICO, he actually meant to say an IPO for Ripple the company going public. Now we know Coinbase years ago was valued at 8 billion, Ripple the company was valued at 10 billion, and that was years ago, and that does not consider XRP at all. And based off this and all of the information the company has shared, Ripple will go public in the future. We also have Ripple's annual event Swell with their agenda that will be based in Dubai in November. Remember, Ripple has an office here in the DIFC, that district with tons of fintechs. And looking at the Ripple Swell agenda, we can see custody and a tokenized economy with Medico. We can see bringing financial markets on-chain through tokenization, stocks, bonds, private equity, improving private and public financial markets, building the future of crypto regulations with VARA, V-A-R-A, and this stands for the Virtual Assets Regulatory Authority for the Government of Dubai. Navigating the future of carbon markets. Now this is an agenda and this is a narrative to take advantage of because this will still lead to tons of transactions on some of these DLT networks. And trends in crypto liquidity across regions. We also had some big news from Hong Kong's rating agency, the HKVAC. They added Hedera or HBAR, Maker, Quant QNT to its key indexes and replaces USDC with XRP. So in the official announcement it says detailed information will be published on the official website on October 20th in a few days. And we can see being added to the Crypto Global Large Market Cap Index, we have HBAR, Maker, we have ICP, and under their Crypto Large Market Cap Index, we can see QNT as well. And within the Global Large Top 5 Index, XRP is going to be included. We also had this month Kramer predicting a Bitcoin crash. Good, keep predicting those crashes. And in the next video, I really want to dive into the Casper virtual machine and some recent news, and same thing for Hedera. We can see in a few weeks that Casper Labs, IBM, and Gartner are going to be hosting a webinar. Now, we've discussed in the past how deep Casper Labs and Casper Network really goes into IBM. They'll be discussing building more responsible artificial intelligence systems leveraging blockchain. So we have Casper Labs CEO, we have Watson X, and we have this gentleman, the big shot from IBM. Together, Casper Labs and IBM are addressing the need to build enhanced governance and transparency into AI by applying IBM's AI and data platform, called Watson X, and blockchain's uniquely tamper-proof nature. In the next video, we're also going to dive into Hedera, and I really want to emphasize this partner ServiceNow because it's a lot bigger than people think. This company used to service 80% of the Fortune 500, so all of the Fortune 500 servicing 80%, but now that number is actually up to 85%. And they're working with Hedera to build digital workflows leveraging DLT. At first glance, I bet a lot of people overlook this, but the ramifications of this are huge. I hope you guys enjoyed today's video. A huge thank you to anyone that hits the like button or shares this around, and I will catch you in the next one.